There's been talk lately in the news of a proposal to make tips tax-free. I'm talking about the cash tips given to service providers based on the satisfaction with the service. And I'm not here to comment on the evolving tipping culture or if making tips non-taxable is a good idea, but it's hard to have an informed opinion if you don't know how tips are taxed currently. Hey, my name is Mark too, and I'm a CPA and former reseller who specializes in helping online resellers with taxes and with growing their businesses profitably. A lot of my clients with online businesses also have other W-2 jobs or side jobs, many of those in the service industry, whether that's food delivery, ride sharing, servers, stylists, valets, massage therapists. These are all jobs in which tipping is common and makes up a significant part of the worker's earnings. If you're really interested, you can always check out IRS Publication 531 about reporting tip income. You'll see that in the IRS's opinion, reporting tip income correctly isn't difficult. Keep a daily tip record, report your tips to your employer, report all your tips on your income tax return. So there you go. The IRS thinks it isn't hard, but I think they might be forgetting that there are thousands of other tax rules we're supposed to be following as well, and that can get overwhelming pretty fast. I haven't worked a whole lot in the service industry where tips are common, but my guess is that these guidelines are often not followed. Let me know if I'm wrong in the comments. I do know that there are estimates that up to 40% of all tips in the US go unreported. So that implies there are potentially 60% of tips being reported for tax purposes. That means making tips non-taxable really just affects the slim majority of those who are currently paying taxes on them. The only thing that changes for those who are not reporting them is that they don't have to worry about paying potential penalties on that reported tip income. Spoiler alert, tips are taxed as regular income. This means they're subject to federal income tax, Social Security tax, and Medicare tax, just like your W-2 wages. Employees are supposed to report all tips to their employer, who will then include it by lumping it in with their other regular reported income, and will withhold income tax and payroll taxes from their regular paycheck. Now, tips includes tips received directly from customers, tips received from other employees under any tip sharing arrangements, and charged tips. For example, credit card and debit card charges that the employer distributes to the employee. Both directly and indirectly tipped employees must report tips received to their employer. There's a rule that says if the monthly tips are less than $20, you don't have to report it to your employer. Though that's true, those tips are still technically taxable and should be reported on your tax return. Tens of billions of tip income is reported every year in the United States to the IRS, so making tips non-taxable would have significant implications for both employees and the tax system. Certain employees and workers would have an immediate increase in income. Workers in some industries can make up to 50 to 100% of their base salary just from tips. Making tips non-taxable essentially would shield half their income from taxes. It would simplify tax reporting for employees because they wouldn't need to track or report tips as taxable income. From an employer perspective, employers would have fewer reporting requirements related to tips, simplifying payroll processing. And while all that sounds great, it also represents the loss of tens of billions in tax revenue, which impacts federal and state budgets, which then just prompts other tax measures and the government trying to make it up elsewhere. That's one reason I think they'll keep the 1099 threshold low, even though there's talk of eventually raising it. More money in worker wallets could drive additional consumer spending, which could benefit certain sectors of the economy, but then it might affect wage negotiations and expectations in certain industries where tips are prevalent. Maybe employers would lower base salaries, and then of course it would spark conversations about fairness, but that's for another YouTube channel. In summary, tips received are taxable and reported on your taxes. And as a business owner who pays tips as part of the normal course of business, you can deduct those tips paid against your business income on your tax return. Subscribe for more videos on how to get your taxes and accounting on track in your reselling business, and check out @NotYourDadCPA on Instagram for more tips and behind the scenes. I want to help you optimize your tax situation so you can ditch the anxiety and focus on building your business profitably.